Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Teva Pharmaceutical Industries Limited annual report. Teva Pharmaceutical Industries Limited offers a wide range of businesses and services across the pharmaceutical industry. At its core, the company develops, manufactures, markets, and distributes generic and biopharmaceutical products globally. Its product portfolio includes various dosage forms such as tablets, capsules, injectables, inhalants, liquids, transdermal patches, ointments, and creams. In addition to its extensive range of generic medicines, Teva also focuses on specific areas such as the central nervous system, CNS, respiratory, and oncology. The company provides active pharmaceutical ingredients and contract manufacturing services, catering to the needs of other pharmaceutical companies through its out-licensing platform. Teva's product offerings are diverse and include branded medications for various conditions, including multiple sclerosis, chronic lymphocytic leukemia, indolent B-cell non-Hodgkin's lymphoma, schizophrenia, asthma, and neurodegenerative disorders. The company also offers over-the-counter, OTC products under its own brand names. Furthermore, Teva has established partnerships with several companies through collaboration agreements and license agreements, including Medincell SA, Sanofi, Alvotech, Biologic Design Limited, and MODAG GmbH. With a rich history dating back to 1901, Teva Pharmaceutical Industries Limited is a prominent player in the global pharmaceutical industry. The company's services include generic medicines, branded medications for specific conditions, active pharmaceutical ingredients, contract manufacturing services, out-licensing platform over-the-counter, OTC, products. Some of the notable branded medications offered by Teva include BNDKA and TRENDA injections for chronic lymphocytic leukemia and indolent B-cell non-Hodgkin's lymphoma COPXONE, for multiple sclerosis AJOVY, for migraine prevention AUSTDO, for neurodegenerative disorders UZDY, for schizophrenia ProAir Rispi Click inhalation powder, for asthma QVAR Ridihaler, for asthma BRALTUS. A long-acting muscarinic antagonist CINQAIR/CINQARO injection du resp Spiramax budesonide and formoterol powder, inhaler Air Duo, Rispi Click fluticasone propionate, and salmeterol inhalation powder. The stock price of Teva Pharmaceutical Industries Limited has skyrocketed in the past year due to a combination of factors. The company's pivot to growth strategy, which focuses on high-margin branded therapies and operational efficiency, has been a significant driver of investor confidence. This shift away from being primarily a generics-focused business has led to substantial revenue growth from innovative drugs such as AUSTEDO, AJOVY, and UZEDY. Teva's financial results for 2025 were also strong, with revenues reaching $17.3 billion and net income of $1.41 billion. The company's fourth-quarter earnings per share, EPS, significantly surpassed forecasts, leading to a positive market reaction. Additionally, Teva continued its efforts to reduce debt, lowering gross debt to $16.8 billion and net debt to $13.3 billion by the end of 2025. The company's pipeline progress and strategic partnerships have also contributed to increased investor confidence. Key developments include a $500 million milestone payment from Sanofi and the submission of a new drug application, NDA, for olanzapine LAI. Furthermore, institutional investors such as Phoenix Financial Limited significantly increased their holdings in Teva during Q3 2025, signaling a renewed conviction in the company's turnaround plan. While there was a slight dip in the stock price due to a lower-than-expected 2026 outlook, the overall trend for the past year reflects a substantial rally driven by the successful execution of its strategic initiatives and strong product performance. As a result, Teva's stock price has increased by over 112% in the past year, making it one of the top performers in the industry. The primary drivers of revenue growth or decline for Teva Pharmaceuticals can be attributed to several key factors. In the United States segment, the company has experienced significant growth due to increased sales of generic products, including biosimilars, and the launch of AJOVY, a new product that contributed $295 million in revenue in 2025. In contrast, the Europe segment has seen a decline in revenue due to decreased sales of generic products. However, the company's AJOVY product has performed well in this region, contributing an additional $54 million in revenue compared to the previous year. The international markets segment has also experienced a decline in revenue due to decreased sales of generic products. This decline is attributed to various factors, including changes in market trends and competition. On the other hand, development milestone payments have emerged as a significant driver of revenue growth for Teva. These payments contributed $500 million in revenue in 2025, highlighting the company's focus on innovation and R&D. In summary, while some segments have experienced declines in revenue, others have shown significant growth due to increased sales of key products and development milestone payments. As Teva continues to implement its pivot to growth strategy, it is likely that these trends will continue to shape the company's revenue performance. The company's financial performance has shown significant improvement in recent years. A key indicator of this growth is the shift from an operating loss to a substantial profit. In 2024, the company incurred an operating loss of $303 million, but by 2025, this had turned into a profit of $2,157 million. This increase in profitability has also translated into improved cash flow from operations. The company's cash from operations increased from $3,300 million in 2024 to $3,556 million in 2025. Furthermore, the operating cash flow itself has shown a significant improvement, rising from $1,247 million in 2024 to $1,649 million in 2025. The positive operating cash flow is a crucial indicator of a company's financial health and sustainability. It suggests that the company is generating sufficient funds to cover its operational expenses and invest in growth initiatives. Overall, these numbers indicate that the company is on a solid footing financially and is well-positioned for future growth. The company's debt level has undergone a notable reduction over the past year. As per the financial records, the debt level decreased from $17,783 million in 2024 to $16,807 million in 2025. This decline can be attributed primarily to two factors: the repayment of senior notes at maturity and fluctuations in exchange rates. The decrease in debt level is a positive indicator for the company's financial health, suggesting that it has successfully managed its liabilities and reduced its overall debt burden. The financial performance of Teva's segments and regions varied significantly over the past few years. In terms of segment performance, the United States was the standout performer in 2025, with revenues increasing by $1.152 billion and segment profit rising by $916 million compared to 2024. In contrast, international markets performed poorly in 2025, with a decline in revenue of $301 million and a decrease in segment profit of $25 million compared to 2024. Europe's performance was relatively stable, with only slight decreases in revenues and segment profit in 2025 compared to the previous year. The regional performance highlights that the United States was the strongest performer, while international markets struggled. This suggests that Teva may need to reassess its strategy for these regions to improve their financial performance. Management at Teva Pharmaceutical Industries Limited is optimistic about the company's outlook for 2026. They expect continued growth in key innovative medicines, expansion of their pipeline, and successful execution of business development opportunities. Despite challenges such as competition in the generics market and loss of exclusivity for certain medicines, management remains confident in their ability to adapt and innovate. Management has also emphasized their commitment to achieving long-term financial goals through financial discipline and debt repayment. They aim to improve credit ratings and contribute to the company's overall success. Overall, Teva's strategy focuses on innovation, growth, and financial stability, positioning the company for future success despite current market challenges. The company has made several acquisitions and divestitures over a period of time. In terms of acquisitions, the company has acquired indefinite-life intangible assets, goodwill, and property, plant, and equipment that may increase following future acquisitions or collaboration agreements. Additionally, the company has purchased $40 million worth of subordinated convertible bonds from Alvotech. The company has also made several divestitures, including the planned divestiture of its API business, proposed divestiture of assets as part of its pivot to growth strategy, and closures and / or divestment of manufacturing plants worldwide. Furthermore, the company has sold certain product rights in Europe and initiated a renewed sales process for one of its business ventures in Japan. It is worth noting that some of these transactions are still pending or have been announced but not yet completed. The company's acquisitions and divestitures reflect its efforts to adapt to changing market conditions and focus on its core business. The company's dividend payment history reveals a significant gap since December 2017, indicating that it has been over 4 years since shareholders received a dividend payout. Furthermore, there is no record of share buybacks, suggesting that the company has not repurchased its own shares to reduce outstanding stock or boost earnings per share. That concludes the financial summary for Teva Pharmaceutical Industries Limited. Feel free to comment below, and I will be happy to answer them when possible.